Welcome to the Think Factory podcast. We got one question for you. What keeps you up at night?
Hi, this is Jim Devern from the Think Factory, and we're recording a Fintech-focused podcast with Stephanie Yu from Uplift Upgrade. And Stephanie, if you would, could you introduce yourself and talk about what you're doing in the marketplace?
Sure. First of all, happy to be here with you today, Jim. Stephanie Yu, I'm the Director of Product at Upgrade, previously Uplift, and we were acquired by Upgrade late July this year. Uplift is a category leader in the travel buy now, pay later space. We are directly integrated with over 250 travel merchants. These are the largest airlines, cruise lines, and merchants selling, vacation packages, etc. We offer flexible payment options to the travelers, and I oversee the product development for our core buy now, pay later product at Uplift. That's our Uplift Pay Monthly product. And prior to that, I started my career at Moody's Analytics, the software arm for the rating agency. And I had a number of roles, just building data analytical products for financial institutions, mainly for their lending business and their credit portfolio management.
That's really interesting. So it's quite a change step from the analytical side into the world of embedded finance.
Yep.
How has your market reception been? Is it a concept that your 150 clients get when you turn up, or is it an education process? I know we were talking about the fact that embedded finance seems to be a word that is really getting talked about a lot now.
Yeah, for sure. I think particularly for buy now, pay later, it is really the perfect example of embedded finance. It has taken hold on the consumer financing really for its flexibility and also the seamless integration in the checkout flow. At Uplift, we help travelers make thoughtful purchases through the flexible payment options. Just to give you a concrete example how this can look like in real life. As a traveler, you might be looking to take your family a once-in-a-lifetime trip to Alaska. It could be for any vacations, celebrating college graduation or anniversaries with your significant other. You will go on to the cruise partner website and look for the travel itinerary that works for you. And depends on the itinerary, it can get expensive, particularly if you have a family of 4. And that's where, Uplift comes in. We break down the upfront large expenses into monthly installment payments. We take the largest barrier to entry out of your trip planning process. So you can take the trip you want and take your kids to explore the world, create wonderful life experiences that truly matter. And the application itself is seamless, embedded in that, checkout experience. Application is easy. The decisioning is instant. We offer a few options to consumers to pay off their balances in a agreed upon time frame upfront. We offer installment plans ranging from 3 to 24 months. We make sure the cost is clear and fixed at the time of someone making the purchase with simple interest and predictable payment, no late fee ever, as opposed to, the traditional credit cards that could be charging interest on a revolving balance month to month. In other words, interest on interest. With Uplift, you always know, how much you're paying and when at the time of your purchase. There's no surprises to how much you will be paying later down the road.
That's a real differentiator from doing it as a credit card transaction, isn't it? That the interest rate is either low or zero.
Exactly. So we offer, 2 types of financing options based on essentially what our merchant partners will be able to offer. Typically, if our merchant partners have inventories and have budgets for a particular, set of their inventory, they will run 0% financing, meaning the consumers are not paying for any interest in addition to just the trip amount, and the merchant is the one subsidizing for that 0% financing. And then we also offer, the interest bearing offers for, anywhere between 3 to 24 months, so that consumers have the option to also pay, with the plans that make sense for them.
That's great. And just the operations of fintechs always fascinate me, having come from various fintechs. And I guess, how long did it take to go from 0 to 150 customers? And how do you grow the organization as the number of customers, the number of products grows?
Yeah, that's a great question. We really see our growth strategy being, three-pronged. The main one being by growing our merchant relationship. We really serve our travel merchant partners, and we grow as the travel industry really rebounded post the pandemic. And in the past 3 years, we've seen tremendous growth as people want to travel, more travel inventories on the market. There's also even more demand, I would say, than just what's available for people to choose from. Thinking about, just how expensive now is to actually book a airline ticket, just because there's just so much demand that airlines can't keep up. And so that's one area for growth, by onboarding more new partners. And then we also deepen our partner relationships by penetrating or making our product available on all their travel inventories. And then the third is try to really innovate together with our partners to provide the flexible payment options that works for the consumers.
Great. And how many people are you now?
So in terms of our company, we are, for the Uplift arm, we're about 200 staff. And then in terms of, how many consumers we have served over 2 million customers.
Wow, that's a lot. So you must be taking advantage of the best of technology to be able to service that many transactions.
Yeah, for sure. Yeah.
That's great. One of the things that we had talked about earlier was Finovate, and I'd just be keen to get your overall impressions on what the conference brought to you. What were the key themes that you saw being discussed there, and what benefit did you take out of it?
Yeah, I had a blast at Finovate. There was a lot of really innovative companies doing demos of their product, granted early stage, but it was great to see many innovations at the conference. And I think what impressed me most is seeing how AI is having a moment in the financial world. I always believe that AI has the potential to customize customer experience and improve efficiencies in the back office function that is so critical to financial services. So it was great to see that many of the innovations are on that front at Innovate Fall. AI is being used to really customize and personalize many of the financial products in ways that have never been economical before. As an example, one of the startup presented at Innovate Fall called Bud is using AI to analyze a customer's spending habit and flag areas that they might be overspending on, say, non-essential categories. And then the AI would offer suggestions for improving these habits and find ways to save on certain expenses. It's like having a personal finance coach at your fingertip 24/7. I think the best part of this is it really can do this in real time, continuously adapting its recommendation as the person's financial situation changes, the data has changed. And another example of this is Chimney, which actually won the Best of Show award this year at Finovate Fall. It uses AI to provide homeowners with actionable advice about their home value, home equity, their borrowing power, and ultimately pre-qualify homeowners for credit products. It does so by combining, financial house data from the consumer and also blending it with the homeowner's property data. It also empowers the financial institutions to make more personalized loan recommendations and offers and faster and at a more attractive rate in this competitive, home equity space. And just looking ahead, I think we will see more kind of AI applications in the premium financial services sectors like the wealth management and the traditionally high service functions like compliance. AI might not replace humans completely, but we could have, human in the loop, but AI will still make a difference instead of us just relying on customer service reps.
See a future for AI and I know the answer to this, uplift, upgrade. And is there anything you can tell us about your thoughts?
Yeah, for sure. This is definitely something that we will take advantage of and upgrade. Our mission is really to make responsible financial products for consumers, help them, spend responsibly and build a credit profile responsibly, and you will see more, of the product that we push to the market that will leverage the AI element.
It's really interesting because you're in a spot where I think if people sat and thought for an hour or two, you could really find great ways to link that with the buying experience.
For sure. Yeah. And I think with upgrade, it's the type of financial service we can provide will be more powerful. And I guess just for people who might not be familiar with Upgrade, Upgrade is a neobank fintech startup, and it has really built, a suite of financial products over the past 5 years. And Upgrade started with the personal loan product, as its founders are, the founders of Lending Club, who is essentially the pioneers of, online peer-to-peer lending. And, personal loan is the product that the founders know the best, and that's where the company has started. And since then, the company has built, a suite of financial products that include, auto loans and home improvement loans and high yield deposit accounts, as well as a suite of card product that I can get into a little bit later. But with Upgrade, the founder's vision is really to make sure we're building financial products that helps people to, spend as well as, borrow responsibly, keep them on track, and also give them rewards as they, act responsibly.
It's interesting because fintech passed its anything goes stage, as I would call it, and I'm an older guy, and I equate it to the internet boom of the early 2000s when you had a ton of ideas that all got funded. And within 6 months of the bubble bursting, kind of 60 or 70% of them didn't pass the muster and went quietly away. What have you seen as a fintech and, a growing financial services organization as the headwinds that you faced over the last year as the market has changed for fintechs?
Yeah, Jim, you really nailed it on the head. If looking back on the past 12 months, to say that, the market condition for the fintech has been volatile is a gross understatement. The Fed has raised rates faster in this cycle than it ever has in its entire history. We had inflation level that we haven't seen since the 70s. We had a wage growth that we haven't seen since the early 90s. So it's a confluence of things, and no doubt we're in the economic reset, and the interest rate hikes have for sure had a definitive impact, particularly on fintechs, especially the ones that relied on the cheap money to fuel growth, as you somewhat alluded to. And some startups closed shop, and while others have emerged stronger and more resilient. And I would say the ones that emerged stronger and more resilient are the ones not only leverage the technology, the power of the technology, had great ideas, but also had the operating experience, particularly for finance. Those are the companies that really stayed on. I think Upgrade is definitely one. And we've also seen in the fundraise environment as well, investors are demanding core sustainable growth from startups. Startups are expected to run more efficiently than growth at all costs. Looking ahead, I think it might be a bit premature to say all is behind us. The great rate debate is still ongoing. I think Fed is still wrestling with, what the right level of interest rate needs to be long term, and could be anyone's guess what that rate could be. Regardless, I think an elevated interest rate is here to stay for the foreseeable future. Gone, the days of companies just borrowing money like it's free candies are over. Companies will need to really focus on building solid fundamentals and a strong business model. And it will be a good thing in the long run because it really forces companies to build real value and create products that customers really want and need.
Yeah, and to put those financial models behind them that are sustainable, don't bet the bank, as we used to say. That when the term I always come back to is it seems every time there's a pending financial crisis, everyone in the industry believes that we're getting a soft landing. I always say when you hear the term soft landing, it's time to head for the hills. I guess I would say in your own business, did the post-pandemic inflation, consumers having to deal with that kind of record high borrowings, that must be in your type of business something that month to month leaves you with a lot of what if type of questions, and what's the impact on volume going to be, and as a team, how did you navigate through them?
Yeah, for sure. I think we have built our own proprietary underwriting model, and I think one big advantage for BNPL industry is it's a relatively quick turnaround product. So we will be able to not only adjust our underwriting criteria as we see how the market conditions has changed, but also be able to very relatively quickly see how these loans are performing, as these are typically under a year term loans.
You got to put your Moody's Analytics education into practice.
For sure, yeah.
Coming out of tailwinds, what's your outlook for the next year, 2 years? It sounds like you guys are headed for the stars.
Yeah, I think we touched upon, we will see more AI applications in the financial service industry. I continue to believe this will be the case for the next 12 to 24 months. I think embedded finance is here to stay, as we talked about. We'll see more innovations around how to embed financial service in, just the job to be done or stuff to get done for consumers and business alike. And I particularly want to double click on the buy now, pay later industry for the next 12 to 24 months, not only because it's my jam, but also it's been in the news lately as BNPL surges to an all-time high as a percentage of, the Black Friday and Cyber Monday sales. I think the stats based on Adobe Analytics tracking was BNPL purchases this year was up 43% from a year ago for the same period. But if we zoom out, just a little bit, take a step back, and today BNPL is still in the early innings in terms of gaining that overall share of the checkout wallet. In U.S. Online e-commerce, BNPL is about 5 to 6% of the overall transaction volume. In markets where BNPL is more established, say Australia or Europe, it has perhaps a market share anywhere between 10 to 20%. So it's poised to become an even bigger part of the e-commerce landscape in the future for its convenience as well as the embeddedness in the checkout flow. And it's not just about online transactions. We're also seeing BNPL showing up in brick and mortar stores. So it will be a huge opportunity for traditional financial institutions and neobanks to take advantage of in the next 12 to 24 months. And on a very much related note, we will also see, an emergence of a hybrid credit cards. It's a new type of credit product that we're seeing coming onto the market that combines the feature of a traditional credit card with the features of a buy now, pay later plan. It gives, consumers the flexibility to make purchases with a BNPL installment plan, or just carry a balance from month to month, like a typical credit card, enjoy the benefits that come with the credit cards, like rewards. And ultimately, consumers get the choice between, two different options, based on their preference and financial situations. And one example of this is the Upgrade One card. It's a credit card and debit card all in one. And consumer has the option to pay now or pay later, use the credit only when they need it, and turn every purchase into a monthly installments. Very much the BNPL value prop, but also with a broader reach. Like any card products, it's accepted at millions of merchants, point of sale terminals. And I think as companies try to outcompete each other with better products and better features, ultimately we will see more of these hybrid credit card innovations that will be good for the consumers. More optionality, more options to choose from. Overall, it will be great for the consumer finance.
I've seen these cards before, and I think many of them that are on the market are best value for the credit card company, but not necessarily good value for the consumer, only because the interchange fee is embedded in the credit card transaction. And then I think that the credit card logic is that if you turn it into an installment, you're also getting slightly lower rate than you are on the headline credit card rate, but you hang the balance out for a longer period of time. So I think for a firm like yours that can come in with a low cost operation model, strong merchant relationships, there's a much better product that can be offered and gain market share.
Yeah, for sure. We are definitely, trying to pass on all these, awards, to our consumers so that, we're lowering essentially the transaction cost for the consumer ultimately.
That's great. One other thing that fascinates me is I'd imagine that Upgrade, who I know less about than Uplift, must have a significant customer base that would provide, both the customer bases should provide synergies for growth to the other.
Yeah, for sure. We see a ton of opportunities to cross-sell, in the future. I think right now the focus is really how do we integrate the two companies' product, making sure we provide a seamless service to our both of our consumer base. So there's no confusion. Who am I banking with? Who am I borrowing with? And the consumers will only be they only need to care about what's my payment plan, when is my next payment due, making sure they are on track to their financial goals and not to have to worry about who they will need to call today.
That's great. That's great. I think we're at about time, so I'll let you give a parting quote. What do you want people to remember about Upgrade and Uplift? Then we can wrap it up. And it's been extremely interesting talking to you. I learned a lot.
Yeah, I will give the mission from Uplift. We are here to create financial products to help you with the life experiences that matter to you.
Simple and says it all, I think. So with that, we'll wrap up. And you're certainly a company that I'll follow as time progresses, because I think you're doing something really unique in the market.
Thank you.
Yeah, have a wonderful day.
Thanks, Jim.